Hi there, welcome to Grain TV. I'm Kevin McNew. It's Tuesday, October 4th, a mixed day in the markets. Let's take a look at Grain Hedge's trading platform and see where we closed. In Chicago, beans losing 10 cents, giving up yesterday, half of yesterday's 20-cent advance. Wheat was off a penny, and corn managed to hold on to a 2-cent gain, getting closer to that magical 350 mark. News today, let's start first with news out of Egypt. They bought 240,000 metric tons of Russian wheat. There were 9 different offers put forward on the Egyptian tender. All of the deals that went down were to Russia. Other news, FC Stone came out with new production forecasts for the U.S. grain crop. They pegged U.S. corn yield at 175.2. That's up from 174.4 at USDA. And soybeans, a whopping 52.5 bushels to the acre versus USDA's 50.6. Other news, the British pound continues to erode, hitting a 31-year low based on the fears that are coming with the Brexit deal. So, basically the US dollar has been gaining some strength here in the last few days. We reached the highest point on the US dollar index in over 2 months. So that's not necessarily good news for grains as we get into the export season. We obviously want the U.S. dollar to be weaker instead of stronger, which is what it's tending to do right now. Other news in turning to weather, long-term weather forecast, the Climate Prediction Center says that the likelihood of a La Nina is slipping as we move into fall and winter. They say that ENSO neutral, the neutral phase of the El Nino La Nina cycle, is the most likely outcome for fall and winter. So that spells better growing conditions for South America. If we were to see La Nina, those tend to be associated with droughts in the southern hemisphere. So a neutral reading for the ENSO index is likely to mean normal growing conditions in South America. Let's take a look at basis levels. We've had a really sharp downturn, especially in soybean basis in the last couple weeks. We've managed to stabilize a little bit, although really at the crushing plants, who were sort of last to fall, we're seeing crushing plants really sort of move lower this week as the full force of soybean harvest starts to hit in Iowa and Illinois. River terminals have managed to hold fairly steady this week after losing a bunch last week. In corn, we've held on pretty good for the last few weeks here, not seeing any sort of appreciable movement down. The full brunt of the corn harvest still may be in front of us. Most producers have been harvesting soybeans in Iowa and Illinois, so we know they're going to be turning to corn here shortly. Barge rates have been slipping a little bit, which is good news for basis after turning higher for the first month of September. I wouldn't be surprised to see another uptick in barge rates as we get into the full swing of corn harvest. Speaking of corn, let's take a look at corn action today. First of all, this morning, if you were a Grain Hedge client, you got our technical alerts, and we were calling for a strength in the corn market going into the morning break and into the morning trade session, hitting a target of 348. We did manage to clear that and trade as high as 349 in today's session before settling a little bit below that. So, here we've seen the last 2 days where the market has traded beyond its range of the opening bell. First on Monday, we had a fairly narrow range, but managed to catapult higher, especially on the strong export numbers and the spreading going on between corn and wheat on Monday. So corn managed to close sharply above its opening range in the morning session. And likewise today, even though the range was pretty narrow, we did manage to close above that range. But we're getting up into that 350 zone. I would be surprised if we were able to muster much enthusiasm from buyers above 350. This is a market that still has a lot of harvest left to see, and a lot of more pressure, I think, in terms of finding bin space, and pressure on basis is my best guesstimate of what we're going to see in the coming weeks. So overall, if you're a producer, I think it's a good time to be trying to sell into this rally. Get that grain off the combine if you need to move it into the market and get it done quickly, because I'm not sure this rally will hold all that much longer. That's all we've got for today on Grain TV. As always, if you'd like to learn more about how we can help you in your own grain trading situation, for example, by getting technical alerts every morning, visit us online at grainedge.com and take a free trial of our trading services. As a Grain Hedge trading client, you'll get our technical alerts email first thing every trading day. Technical alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by technical alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.